Hello and welcome to today's ResNexus webinar, Hospitality Essentials, Bookkeeping Best Practices. In this presentation, I'll be going over the very basics of accounting for businesses, defining accounting terms and how they work, and showing you how to use accounting reports in ResNexus. This won't necessarily be a comprehensive guide to all things accounting, as there's only so much I can cover in one webinar, and I'd like to keep it introductory for now. But first, here's a little about me. My name is Gavin Wadsworth. I'm a hospitality researcher and content writer for ResNexus. One thing I'm not is an accountant. I have a basic understanding of accounting principles, but you shouldn't construe this presentation as financial counsel or advice for your business. The purpose of this webinar is largely educational, and I'm not qualified to give you professional advice for your finances. But regardless, I am excited to share this topic with you today, as it seems there's a lot of interest for it. Thank you so much for attending, and I hope you get value out of this webinar. So let's get into it, starting with accounting basics. And accounting basically just means maintaining, analyzing, and operating your business's finances. And having accurate accounts is important for a lot of reasons. Here are some of the problems that can arise without proper accounting practices. So there's inefficiencies and errors. You risk making mistakes that could cost you time, money, and opportunities. And that can lead to confusion and wasted resources. Cash flow problems. Inaccurate accounting can leave you struggling to manage your finances, leading to cash flow problems and difficulty paying bills on time. There's also the possibility of tax penalties. Mistakes can lead to errors in your tax filings, potentially resulting in penalties and fines from tax authorities. Loss of credibility is another one. Trust is very crucial in business, and inaccurate financial reporting can damage your reputation with investors, lenders, and customers. And finally, missed growth opportunities. Accurate accounting provides insights into your business's financial health and performance, helping you identify opportunities for growth and expansion. All right, so we've established the importance of accurate accounting, but how do you get started? Well, this first step may seem obvious, but you should set up a business bank account that's separate from your personal one. Keeping your personal and business expenses separate is extremely important. Keeping separation between you and your business can be important for legal and liability reasons. It's also easier to work with for financial management and tax compliance, and it's really what you should be doing. So, if you're just getting started, this is the first step you should be taking if you haven't already, and that's to create a dedicated business bank account. In general, you should be using your company card for business expenses and collecting the receipts so you can record the transactions and keep your bookkeeping accurate. Now, when it comes to accounting, there are two basic types, and those are cash basis and accrual basis. In cash accounting, revenue is recognized when cash is received, and expenses are recognized when cash is paid. This method is simple and straightforward, but it may not provide an accurate picture of a business's financial health since it doesn't account for transactions that are pending or invoiced. Accrual accounting records revenue and expenses when they are earned or incurred, regardless of when cash is exchanged. This method provides a more accurate representation of a business's financial position, as it reflects all economic activity related to the business, not just cash transactions. Let's take a look at an example that better illustrates the difference between these two. Let's say you have a bed and breakfast or other type of lodging, and you're using cash basis accounting, which again basically just means you're recording payments as revenue when you receive them, just like you probably do for your own personal finances. And for this simplified example, we're assuming that your guests book about 1 month in advance of their bookings, just so we can see it clearly on the graph. So the blue line shows your revenue and the red line shows your expenses. The spike in the blue line is a month before the spike in the red line because, again, guests are booking 1 month in advance. Imagine you record all the deposits for June a month in advance in May as revenue, and then use that money to invest in renovations and a new gazebo. And then a pipe bursts and causes water damage in all of your rooms, and you have to refund everyone their deposits because they won't be able to stay anymore. Suddenly, you've spent a lot of money that you don't actually have. And this is just one example of how cash basis accounting can get you into trouble. Tax complications could also arise due to distortions in your financial statements when you use cash basis accounting. Here, we can see what the graph looks like under accrual basis accounting. Now, the revenue is recognized when it is earned rather than when the payments are made. In this example, it causes the peaks in expenses and revenue to line up with each other and provides a clearer picture of your business's finances. Obviously, this example is overly simplified, since not all your bookings will be made exactly 1 month in advance. But it demonstrates the issue with cash basis accounting. Even though it might be more intuitive, it's generally a bad practice for businesses, especially in this industry where so many of your payments are being made in advance of services. Another way to think of this is payments versus revenue. Payments are when guests pay for the reservations with deposits or other payments. It doesn't necessarily equate to revenue, which is money you've actually earned based on unit nights you've sold. Just because you've received a payment doesn't mean you've earned revenue, not until the good or service has been transferred to the customer. That's why deposits are actually recorded as liabilities. You've been paid, but that just means that you now owe something. Until that debt is fulfilled, the transaction is not balanced. In the vast majority of cases, you'll want to use accrual basis accounting for your business. Under the accounting settings in your ResNexus back office, you can select which one to use for your accounting, but like I said, you'll probably be using accrual basis. Now, let's go a little deeper into accounting and talk about the different account types. When it comes to accounting, there are 5 basic account types. Every account in your business will fall under one of these 5 categories, and every transaction will affect at least 2 of them at once. And this is referred to as double entry bookkeeping, which we'll go over in just a few minutes. But for now, let's go ahead and dive into what these 5 different account types are. And the first one is assets, which is pretty straightforward. Assets is basically just what you own as a business. So that includes things like cash, which could be physical currency or balances in bank accounts. It also has accounts receivable, which is amounts owed to the business by customers for goods or services provided on credit. Inventory, which is your value of goods held for sale or raw materials. And then other things like your property, equipment, and vehicles. So that includes land, buildings, machinery, and other long-term assets that are used in business operations. Next up is liabilities. These accounts refer to things that you owe to other parties, so that could be banks or customers or other businesses. And it's not necessarily just money either. It could be goods or services that you owe. So here's some examples. Accounts payable. This is amounts that are owed by the business to suppliers or vendors for goods or services purchased on credit. Also, loans payable, accrued expenses, and deferred revenue. Deferred revenue is also known as unearned revenue. So this is kind of like what we were talking about earlier. This is when a customer pays in advance for goods or services to be provided at a later date. As a business that operates with bookings made in advance, this is probably a very common one for you. Third is income accounts, and this is what you earn. You always like to see entries in this account. So some examples: sales revenue, so obviously sales from goods or services, interest income, and then also things like rental income. So basically any money flowing into your business would generally fall under an income account. Next is expenses, which is obviously what you spend. That includes things like cost of goods sold, salaries and wages for your employees and staff, rent expense, utilities expenses, and then also if you have a budget for advertising and marketing, those expenses are, of course, also would fall under expense accounts. And finally, there's equity. A positive equity where your assets are greater than your liabilities indicates a financially healthy business. For some service-based companies, this isn't necessarily true all the time. So, for example, if you've got a law firm or a consulting business where they don't have a whole lot of actual assets, they can still be profitable anyway because their value comes in the form of expertise and experience of their consultants, not necessarily with property and inventory and physical goods. Another way to think of equity is if you sold the business today and sold all your assets and paid off all your debts, what would you be left with? That's your equity. It's also referred to as your ownership interest in the business. And here are a few common examples of some equity accounts you might see. So, common stock, which is shares of ownership in the business, retained earnings, and dividends payable. So, we've gone over the 5 types of accounts. Let's take a look at how you'll actually interact with and look at them. A chart of accounts is a list of all the accounts associated with your business. This is an example from QuickBooks showing some accounts of different categories. For example, bank fees is categorized here as a liability account, and wages is an expense account. The chart of accounts is used to categorize and record all financial transactions, ensuring that each transaction is properly classified and accounted for. By organizing every transaction into one of these accounts, it becomes easier to monitor what's going on with your business financially. I mentioned earlier that every transaction should affect at least 2 accounts. So let's get into what that means and how it works. This equation is a foundational one for accounting, and you might recognize it as being pretty similar to the one for equity. This is just shuffled around a little bit. So the core equation here is assets equals liabilities plus equity. And you'll see how that works in just a minute. So one of the main tenets of accounting is double entry bookkeeping, which says that every transaction is recorded in at least 2 accounts in order to keep that equation balanced. For example, let's say you find $10 on the ground and you add it to your business account. That would be recorded twice. First, $10 is debited to your assets because cash is an asset, but then also $10 is credited to your equity or your ownership interest in the business. Because you're adding $10 to both sides of the equation, it remains balanced. But let's use a more relevant example. If you're anything like me, you have a hard time figuring out how this stuff works without seeing it in action. So let's say a guest makes a 2-night booking a week in advance of their stay, and they pay the full amount of $300 upfront. Remember that under accrual basis accounting, revenue is recognized when it is earned, not necessarily when cash is received. So in this case, because we're doing accrual basis accounting, we don't record this as revenue immediately. So hopefully you'll see how this makes sense. So first we add $300 to assets. So that's $300 on the left side of the equation. Then on the right side, we actually add $300 to liabilities, not to equity. That's because we've received a payment for something, but haven't yet delivered on it. So we actually owe a debt, that debt being the room nights themselves. So we've added $300 to the left side of the equation for assets, and the same amount to the liabilities part of the right side, meaning we have a balanced equation. Now, after the guest comes to stay for their 2 nights, then the debt to the guest has been fulfilled. So we subtract $300 from liabilities, since we no longer owe this amount, and we can now add $300 to our equity, since we've now earned the cash amount that we see in assets. So that's why double entry is so important. You can't just add or subtract money from one side of the equation. In order for it to balance out, every transaction has to affect 2 accounts. Now, let's take a look at the main types of financial reports in accounting and how they work. So when it comes to financial reports, the main one is what's called the general ledger, or sometimes an accounting ledger. This is what you use to generate pretty much all of your other reports. This ledger contains a record of every financial transaction for your business over a period of time. And just like we've been talking about, every transaction is sorted by account types. So again, that's assets, liabilities, income, expenses, and equity. The general ledger is also the core of the double entry bookkeeping system. As you can see from this example from QuickBooks, there's a column for debit and a column for credit. Now, this is just one specific account within the general ledger. So this one looks like it's an asset account for cash. So there will be other accounts. This is just one of the accounts within the general ledger. So for this one, it looks like on January 9th, there was a customer payment of $6,000. Since we know that assets equals liabilities plus equity, and we've added a $6,000 payment as a cash asset on the left side, that $6,000 is also accounted for in another account somewhere else. So not this cash account, but a different one. Depending on the particulars of this transaction, that might mean $6,000 subtracted from an accounts receivable account, in which case the asset side of the equation would remain the same in this instance. So, for example, if we had provided a service to the customer and sent them an invoice for $6,000, that would have been recorded in the accounts receivable account under assets. Then when they pay the cash, we debit that amount on the cash account, and then that amount would be credited from the accounts receivable. To put it more simply, we've added $6,000 to this cash account, but that means $6,000 is also subtracted from the accounts receivable, and that's basically just an account that says we were owed $6,000. Once the general ledger, so again all of these accounts, is closed out for a specific time period, we generate a trial balance. And this shows the balance of each individual account, allowing you to check for errors and make any needed adjustments. Then that is used to make other financial statements. I'll go ahead and look at some more of those statements right now. So next there's the income statement, which shows your business's profitability for a given date range. This is sometimes called the profit and loss statement, or P&L for short. And this report takes your revenue and subtracts your expenses from it to show whether you're making a profit or a loss for that time period and by how much. So for example, if your sales and revenue for a month is $30,000 and your expenses from payroll and utilities and equipment and costs of goods sold and everything comes out to $8,000, then your income statement would show a net income of $22,000 for that month. And again, these are just overly simplified examples. A real income statement would be much more detailed than this is. A balance sheet is a financial statement that shows a snapshot of a business's financial position at a specific point in time. It lists the company's assets, liabilities, and equity, illustrating the equation, once again, assets equals liabilities plus equity. As a reminder, assets are what the business owns, so equipment and cash and property, and liabilities are what the company owes to others, so loans and debts. And equity is what's left over for your business. So this sheet can be visualized in this way with a T separating the two halves of the equation. The reason there are two sides are equal is that your assets had to come from somewhere. So everything your business owns was either purchased using liabilities or equity. You either owe another party for an asset that you have, making it a liability, or you own it yourself, in which case it came from equity. So while it might seem confusing that liabilities are included on the right part of the equation as part of your assets, it's simply because you earned something as a result of those liabilities, and that's represented on the left side as well. Based on the data from statements and reports like those ones, you can gain special insights into your business using financial ratios. And there's a whole lot of them, and we don't have time to go over all of them today, but here's a few examples. So, The liquidity ratio is often referred to as the current ratio, and this provides insights into your business's ability to meet your short-term financial obligations. It compares the total value of assets expected to be converted into cash within 1 year, so current assets, to the total value of obligations due within the same period, so current liabilities. A higher liquidity ratio indicates a stronger ability to cover short-term debts, suggesting a healthier financial position. Another example is the return on equity ratio, which basically tells you how well you're able to turn your equity into more profit to the business. So how well you're able to take the money that you earn and turn it around and make it make more money for you in the future. Like I said, there are tons of these ratios that you can extract from your statements to look at your business from new angles. This can be helpful to find areas in which you might be able to solve problems or make improvements. There are many benefits to accurate accounting. Some of those benefits are about keeping you and your business out of trouble, like we talked about earlier, but others are more favorable. By putting together quality analytics about your business's financial standing, you can more confidently make budgeting decisions for the year ahead. You can use insights from financial ratios to find out what parts of your business stand to be improved and make a plan to execute some changes. You might find areas in which you're spending lots of money that isn't pulling its weight for your business. If you set aside a marketing budget, you can use accounting statements to try and determine the return on that investment later on. Again, budgeting could be an entire webinar on its own, and we simply don't have the time today to go over all of it, but I thought it was important to mention that as one of the major benefits to getting all your books in order. Now that we've gone over the basics of accounting, let's take a look at what ResNexus reports you should be looking at and how to use them. Your PACE report is a good one to check on periodically. This shows how your business is doing compared to previous years as of a certain date. So when you open it, by default, it shows based on the current date. So with this, you can see whether you're on pace so far into the year based on unit revenue, number of reservations, number of guests, occupancy, and your guest return rate. You can also select multiple prior years for more data, though, of course, if you're looking at COVID years, it might be skewed in that regard. But this is really helpful for noticing differences and trends in your business. Journal entries is a report you should probably be looking at daily. And this is basically what we've been talking about with double entry bookkeeping and accounts. You can map your ResNexus accounts with your QuickBooks accounts for easy export on the screen. And these journal entries can then be entered into QuickBooks to easily pull over your ResNexus data into your overall financials into your general ledger. QuickBooks can then make sense of this and organize everything into the correct accounts for proper double entry bookkeeping. You want to make sure everything is balanced and everything is accounted for, and that you don't see any unexpected transactions or other errors. So again, you should be in the habit of exporting your journal entries to QuickBooks every day in order to maintain your financials. Outstanding balances is another report you should be looking at daily. This basically shows you every reservation that doesn't currently have a balance of $0. So you can see which guests haven't yet paid the full amount, and any reservations or purchases that you might owe a refund for. And you can simply click the reservation number for each entry to go straight to that reservation. Revenue summary shows you what you've sold on the books, first showing your total revenue at the top, and then showing room and retail revenue, as well as discounts for the year to date, or you can select a specific date range. To think about this the right way, remember that total revenue equals room revenue plus retail revenue minus discounts for this report. Occupancy summary is pretty self-explanatory, but this is a good one to check periodically to verify with data what your busy, shoulder, and slow seasons look like. If you want a clearer idea of your average occupancy for a date range, you'll of course want to constrain that to probably past months up to the current date. Your occupancy data can also help inform you about whether to adjust your rates for certain times of the year to help increase your occupancy for the slow months or to make more money during the busy months. The payments report lets you see all the payments received for the date range, the current day by default. The payments are organized by type, including card type, cash, checks, gift certificates, and house accounts. This report not only helps you keep an eye on the incoming payments, but also can give you insight into the payment method guests are using most often. Taxes by date shows what taxes are due for a given date range. The report displays all taxes that are due, regardless of whether a payment was recorded in ResNexus. This report is helpful for accounting purposes to view all your taxes in one location. And the last thing I'm going to talk about on the ResNexus side of things today is night audit. A hotel night audit is a comprehensive financial review conducted at the end of each day. This serves to ensure accuracy in the hotel's accounting records, reconciling all transactions, verifying room occupancy, and preparing reports for the following day's operations. Historically, this has been done at large hotels by a designated night auditor, who would work the night shift at the front desk. Since not everybody has the resources to hire a full-time night auditor, we created this night audit tool to help you maintain accurate records and reports and give you an accurate view of your business performance. It takes a bunch of information from the previous reports and compiles it for you in a digestible way, giving you even greater insight into the financials of your business. The other major benefit to Night Audit is that it closes out your financial days. So at the end of each day, you can go through the Night Audit checklist to make sure everything is in order, and then close out the day, and it then preserves the financial history from modification. This is extremely helpful for accounting, as any tampering with past transactions or anything like that can cause problems down the line. Finalized audits will block most reservation actions for anything prior to that date. These would be things like removing or modifying past stay dates, changing retail purchases, merging or adding or removing guests, and most other actions that would affect the revenue on a reservation. You are still able to add payments and refunds to past reservations. This advanced tool is only available with the Premier edition of ResNexus, so if you don't have the resources of a large hotel chain, this is extremely helpful. At the end of the day, the best piece of advice I can give you is to hire an accountant unless you really know what you're doing. If you don't have the budget to hire a full-time accountant, you might be able to hire an accountant on retainer basis on a regular schedule. So whether that's once a week or once a month, depending on your specific arrangements with the accountant or accounting firm. And they'll be able to help you navigate your business's financial health and be compliant with tax requirements. But whether you're outsourcing your accounting to a professional or you're doing it yourself, it's important to understand the basics of accounting and how it works on a fundamental level so you can gain a clearer idea of your business's financials. Hopefully, I've provided you with that basic understanding, but there's always more to learn. We will probably revisit this topic in future webinars, so stay tuned and be sure to fill out the feedback survey after this webinar to let us know what specific topics you'd like us to cover. All right, we've come to the end. I'll get to the Q&A in just a minute, so feel free to start dropping your questions into the field provided. In the meantime, I'd like to say that if you enjoyed this webinar and would like to view any of our past ones, you can do so by going to our website, ResNexus.com. And when you scroll to the bottom, you'll see a Webinars button, which will take you to our entire library of past webinars. And you can also register for upcoming webinars on this page. All right, and now we come to the Q&A. I look forward to answering your questions, and we'll get those answered as fast as we can and in the order they appear.
All right. So before we get to the Q&A, just one more item of business. I'll just first let everybody know that we have Brad, our Director of Operations, and we also have Becky, our bookkeeper at ResNexus, and they're both going to be on to help me out with the Q&A to hopefully answer some of your more involved questions. Thanks for coming on, Brad and Becky.
Yeah, no problem.
All right. Looks like we've got one pretty simple question. Is the process to connect to QuickBooks Online explained somewhere?
Yes,
Probably.
it is. It is. There are several support articles about it. It's actually a very simple process. It doesn't actually connect to QuickBooks Online. All it is an export function that saves your credentials. So the first time you use it, it will ask you to log into your QuickBooks Online account, and we simply save those credentials and then use it every time you click export. So it's very basic, and it's not an actual live connection or anything like that.
Awesome. Thank you. And maybe this is a question for Becky. Someone's asking about, well, they're asking about accountants to recommend. Maybe you can give some guidance on, kind of how to find someone's best for your business.
Well, I would just recommend if you have people that you can ask if they are using somebody that they find is very helpful. I find getting referrals from other businesses similar to your own is a good way to start. Googling is also a good way. There's often reviews on businesses such as that, and then just sitting down. Usually, you can go in and have a sit down with these businesses, get a feel for what they're about and if they're a good fit for yourself and your business.
Awesome. And then I forgot to ask Becky, I'm wondering if you had anything else to say to add on to kind of the presentation that I have. I think you had something you wanted, you said to me that like, oh, you should say that during the presentation.
Yes. So when Gavin and I were talking about this, one of the things that I had mentioned to him is that when if you're doing the books yourself, I mean, I'm not an accountant, I'm a bookkeeper, so I often will defer questions to our accountant. Even though I've been doing books for several years, there will be certain one-off situations that maybe I'm not entirely sure how to proceed with. I might have a good idea of how to do that, but rather than just going ahead with what I think is correct and potentially running into problems down the road where it's going to be a bit bigger of a situation to clean up, I would just shoot a quick email off or a quick phone call to my accountant and just say, hey, this is the situation. This is what I think I should be doing with it, but I just want to make sure that that's how you would proceed with it. Sometimes my idea of what I want to do isn't necessarily the wrong idea, but sometimes accountants have different ways of how they like to see entries made that you just might not be aware of. So I would rather ask the question before doing something than spend hours trying to figure out what the heck was going on when I see something that's not where it's supposed to be. It's much more time effective just to ask a question initially. It also saves money at the end of the year if you are paying an accountant to do your year-end financials and your taxes. If there's less of a mess for them to clean up at the end of the year, your bill from them is going to be smaller.
Perfect. Thanks so much.
You're welcome.
Probably a question for Brad. We've got two similar questions. People asking if there's a way to add their accountant to ResNexus so they can pull reports, or if there's a way to give them view-only access or something like that.
Um, this is always kind of a dicey question. In our user agreement, it does have a section that talks about third-party access. And typically that third-party access and that particular section is referring to competitors or who could be viewed as a competitor to ResNexus. So yes, in accounting terms, as long as they work for an accounting firm and they have a verifiable email address that is for their accounting firm, that should be fine. However, there is no view only when it comes to access like that. The accountant would have full access to make changes, and it would be just like they would have to have GM access in the back office to be able to pull reports. There is a pretty cool feature that we have for the journal entries report, however, that does an automatic export and emails that information every day. So you could set that up to simply email your journal entry report every day to your accountant if that's a safer option for you. That's why that exists. But yeah, you can definitely add them. It's well within your rights to do that.
Another question that's a little bit more involved. I think I'll try and frame this for you. Someone says their desktop QuickBooks is wanting to have a name association for accounts receivable, but they've been told they have to do QuickBooks Online. Do you know anything about that? Whether they should be using one or the other?
Um, that's a good question. Um, my personal preference when I am working in QuickBooks is QuickBooks Desktop, just specifically because the functionality is a little bit better than QuickBooks Online. But there are some restrictions using both versions. I'm that one. I'm not the best probably to ask, but I haven't encountered something like that myself.
Yeah, I believe what they're referring to. So recently we made a change. I believe this has been a couple months back now, where we added a couple of different refund accounts, and one of them specifically was for house accounts. You don't have to switch to QuickBooks Online. They both work the same. They're both just an export. So regardless of which one you use, it's not a question of which one you should use or which one you are using. It's a question of just making sure the accounts match up. So whatever GL account is showing in ResNexus should match the chart of accounts in QuickBooks for what you're trying to export to. And if you need help making sure that they match, I would encourage you to call into your red carpet professional and have them run through that with you. We see it all the time where there's a space or a period or some weird naming scheme or something along those lines, but we could definitely help out with that if you call in and have somebody go through that with you.
All right, another one. Someone asks, is there a report to pull that shows revenue per unit? Correct me if I'm wrong, Brad, but would that be the unit revenue report, or I'm looking at the wrong one?
No, that's correct. Yeah.
That is correct. Yeah. So I think that's the one you're looking for. It's
Literally
called
just
unit.
reverse name.
Yep.
Yeah. Yeah, it looks like desktop will not allow me to download. Yeah, Gene, I would recommend that you call in and get some help with that. There may be something else going on there that we need to look at. I'm not sure why it would. It depends on what the error message. Yeah, it's probably that there is no house account set up for refunds on in your QuickBooks. And again, so what I usually do in those situations is I print a chart of accounts that you have in QuickBooks, and then I look at the chart of accounts, or even just pull them up screen side by side, and make sure that they match, because that's all the computer knows when it does an export. It's looking for those account names to see where to put it in QuickBooks. So they have to match exactly. They can't even be there. It's even capitalization restricted. So
Okay, awesome. Another question. Is the revenue report including liability payment? So if I was going to try and go deeper into that, I wonder if they're asking if, like, for example, if someone gives a big down payment, right, for a stay that's like 2 months from now, is that going to be reflected as revenue in the revenue summary, or would it not be reflected until they come and stay? Is what I think they're asking.
yeah, revenue and payments are two different things. You can't say that a payment is revenue necessarily. Um, and so when you're looking at it, especially with accrual-based accounting, it's a liability because it's technically a deposit. So that would be the deposit report that you would want to look that up on. And it doesn't become revenue, or it isn't recognized as revenue until the item that you sold is delivered. And that usually involves the guest actually checking in and staying. And so what would happen in that case is a payment that is a deposit or liability that's taken for a future reservation would apply in ResNexus as the guest stays day by day.
All right, we got lots of questions coming in. This person says they have a property that has individual owners per unit. How do you create an income and expense report per individual unit or room for each month?
That's a good question. So usually we could do that setting up. Well, I guess it depends. It sounds like a vacation rental to me. And if that's the case, we do have vacation rental um, features built into ResNexus that your red carpet professional could help you enable and get set up, where you could actually create a statement every month. You could also, if you didn't want to go that far, if you just wanted to, for example, if me and Gavin owned two different buildings, yet we used one ResNexus account to manage both of them, I could set up a class called Gavin and a class called Brad, and I could run my reports, at least most of the reports, based on class. And so I could just say, hey, just show me everything in class Gavin, and then we would be able to see what Gavin's revenue was and Gavin's payments, so forth.
I had a question, somebody asking about who to contact at ResNexus if they're having problems. And that would just be if you just go onto your back office and you just go into settings, you can see the support button on the right. And from there, you should be able to find your red carpet professional and just reach out to them, or general support as well, right?
Yeah, yeah, general support's good. I mean, if you feel like it looks like Janine is asked several questions, and maybe again, I'm going to repeat kind of what Gavin said earlier. We don't train our people internally here to be accountants or to understand a lot of accounting, um, vernacular or anything like that. We do teach them how ResNexus works, and this to set up the export's a very simple process that's very well documented. But as far as like how things work in QuickBooks, we don't train them necessarily in that. There are a couple people here internally that are more familiar with that. I am one of those. Somebody asked what the definition of a house account is in ResNexus. That is a very good question. The best way that I can explain what a house account is in ResNexus is that it's a revolving credit account. So, for example, if I went to Walmart and opened up an account at Walmart, that is a Walmart house account, meaning I am able to charge things only from Walmart on that account and then pay a bill once per period, whether that's monthly or weekly or whatever. That's what house accounts is it's basically the property granting credit to a guest or a business or something along those lines, and then billing them one time for various purchases.
Another one. Someone says, does the journal entry report that they would send to their accountant separate which unit's revenue comes from fees and taxes?
Yes, it does separate out taxes and fees in a different section. The room revenue would only be the rate. Yes,
Here's a good one
Lonnie.
that I'm
It,
not
it
sure
could
what
be
the
it
answer.
could be whatever terms. It can be whatever terms you want it to be. It could be net 30, net 15. It's whatever you arrange with the person you're granting terms to. Sorry, was that the one you were looking at, Gavin?
Sorry, were you answering the one? Which one were you answering?
I was answering the Lonnie one about the house accounts, basically net 30 or net 15.
Oh, okay, gotcha. I know I was going to bring up. This is one I'm not sure what the answer would be. What is the best practice for recording donated room nights, Brad?
Donated room nights. That is a good question. Um, it's going to be lost revenue. So usually the best practice I would say is donating a gift certificate so that you at least show that you have that as an expense. But it will, if you do that, it will go through as a normal reservation, and they would just use the gift certificate for that. That would be, I guess it's really up to however the property wants to show that on their books. I mean, Becky might be able to chime in on that a little bit. I don't know how normal bookkeepers would handle like a business that gives away money. I'm assuming it's an expense.
Yeah, I mean, it really depends on how you want to set it up. Some expenses you can set it up as gifts, just as typical expense. Um, that's typically, or you can put it under promotional if it's something that you're doing as a promotional purpose. But it would definitely fall under your expense category.
Makes sense. What's the best way to keep track of your accounts receivable? What report?
Oh, we have an accounts receivable report. That's the best way to keep track of it.
All right, easy as that. Okay, here's one probably for Becky, is my guess. But or maybe it's a ResNexus specific question. But is total revenue generally considered to mean the room payment plus taxes, or is it generally understood to exclude taxes?
Yeah, that's a good question too. I mean, when you're bringing in everything, it goes under your total revenue. Your tax accounts are also going to be an expense that you, like when you pay your taxes, it'll come out of that. But typically, your revenue, when you receive payment for your invoice or your booking, whatever it may be, that payment's going into your revenue account.
Okay, looks like our questions are slowing down. Let's see. What report would we pull to show how much was paid toward each of our fees? I'm not sure exactly what kind of fees are being referred to there.
Yeah, there's so many different definitions of fees that I would have to have more clarity on what that actually is. And kind of to chime in on the previous question a little bit. So in ResNexus on our journal entries report, any tax that is collected actually is supposed to go into a liability account. It is not included in the revenue for your sites or units because the sites and units is technically an income account, not a liability. And you can do it the way Becky said as well, like it could all go into a revenue account, but then you're going to have to make a GL adjustment when you go to pay your taxes. When we have it set up in the journal entries report to go in as a liability, so that you already have it in a liability account. So you can do it either way, but typically it goes, from what I've seen, it goes into a liability account. So.
All right, looks like a little bit of further clarification on the fees question. Looks like things like resort fees, pet fees, dishwashing fees. I assume those are fees that are passed on to the guests. So there's like fees that they would pay on top of the room rate. So I imagine those would just get recorded along with that. Am I mistaken in thinking that?
Yeah, it's just different types of revenue. So it depends. So we have in ResNexus, we have retail items that you can name a fee. So you could say, I have a cleaning fee that's $100 and add that to any reservation you wanted to. That would technically be recorded as retail revenue. But then we also have fees that can be added in taxes and fees. And those types of fees are used for something that's similar to a tax. It's still a liability and would need to go into a liability account. So it just kind of depends on where you as a business want to record that data. Honestly, it just again, these are some of the questions that you probably want to consult an accountant on, what's best for your business and in your area and so forth for the size, because you may not need to do some of the things that a larger business would do. To answer another question, Lonnie, it's the gross revenue is not including tax, because the tax is technically going into a liability account you're going to pay to the government. So it's not your revenue.
All right, perfect. Looks like some people are showing some appreciation for the webinar, so I'm glad we could provide some value for you. Hopefully it'll be a useful resource. And yeah, like I said, go ahead and fill out that webinar survey to let us know what other topics you'd like us to cover, and if we have enough, interest or demand for certain topics, we'll probably get to those eventually. So yeah, I appreciate everyone for showing up and attending. Looks like we've probably come to the end of our questions for now. So if we don't have any more in the next couple seconds, I'll just say thanks again to everyone for attending. I hope you all have a great rest of your week. And if you haven't already, there is the link in the chat to review ResNexus on Capterra. If you have just a few minutes to do that, we would greatly appreciate that as well. Any final thoughts, Brad and Becky?
Nope. Thank you everybody for attending. Again, if you have further questions, the contact information's on your screen for the general support and sales. I encourage you to call and contact your red carpet professional or your red carpet concierge if you have additional questions, and they should be able to help you. If they end up needing help with accounting, they may need to get back to you, because that means they probably have to come talk to me or somebody else here in the building that has a little bit more experience with it. But we should be able to get you some form of help one way or the other. So again, thank you for joining us and have a great day.
All right, thanks. Take care, everybody.